Good evening, everyone. Welcome to our Smarter Home Buying webinar. Thank you so much for joining us this evening. My name is Angela Dennerson, and I'm a Senior Business Development Officer with the Los Angeles Police Federal Credit Union. If you're joining us tonight because you're interested in buying your first home, a move-up home, vacation home, or a home to retire in, then you're in the right place. Our goal with this webinar is to give you an overview of the home buying process, make you aware of some of the things you need to think about, your options, and decisions you need to make so that you make better informed decisions about what may be the largest financial commitment you'll ever make. Before we get started, I'd like to mention that this session is a live webinar and a recording of it will be sent out shortly after. You will be in listen-only mode, but our presenters will have some dedicated time to answer your questions towards the end of the presentation. And we encourage you to ask them along the way by typing in the Q&A box located at the bottom of the screen. So I'd like to introduce our presenters for the evening. Greg Novet is a National Account Executive at Home Advantage. He's a mortgage industry veteran with an expertise in connecting credit union members with reliable real estate agents. Also joining us tonight is Cesar Melendrez, a real estate consultant with Jason Mitchell Real Estate. Cesar has 11 years of experience buying and selling real estate in LA County. He focuses on providing clients with exceptional service, accurate information, and careful guidance so his clients can make the best informed decisions. Our LAPFCU presenter is our very own Veronica Mauskowitz. Veronica is the Assistant Vice President of our mortgage operations at LAPFCU. She's been with us for over 6 years. Prior to that, Veronica's experience working in the mortgage industry spans over 2 decades, including overseeing national operations for large companies. Please join me in welcoming our presenters. So tonight, we will learn more about Home Advantage and the many benefits it has for LAPFCU members. We'll discuss making the decision to buy, how to select a real estate agent, the purchasing process, finding the right home, current market trends, and financing options. Now, without further delay, I will hand it over to Greg.
Thank you, Angela, and thank you for everybody attending tonight's session. I'm here to highlight one of Los Angeles Police FCU's greatest member benefits. It's called the Home Advantage Program. How many of you, and I can't see your hands, so just pretend here, how many of you ever looked for real estate online? Did you go to Zillow, Realtor.com, Redfin, and all those places that people know about? There's so many now, you can hardly keep track of them. Well, what you may not know is that your credit union also offers you an alternative, and it's a safe and protected site that you can do the same things you can do in Realtor.com and Zillow, but in the comfort of knowing that you're not going to be sold off as a lead or generated phone calls from outside sources and spam. We have a safe and protected alternative for you called Home Advantage. Next. Home Advantage really is a one-stop shop for your real estate needs, provided to you by your own credit union. Where do you feel comfortable dealing with your financial doings? You can reach our website one of two ways. If you go to the LAPFCU website, you're going to see a section for loans. You can click on loans and you can scroll down and see Home Advantage there. You'll also see Home Advantage website link in this slide. What we offer is we offer a website that will allow you to search for homes. We have full MLS in all, 49 states. We're not in Alaska, so if you want to move there, we'll have to find another way to do that. But you can get full MLS. You can set property searches. You can value the home you're currently in. You can connect with our concierge team. We have a concierge team behind the scenes that will help you with all your home buying needs and questions and concerns. And finally, next, please. You have access to exclusive network agents that are dedicated and specialized in the law enforcement community. We get you. We understand your needs. We know that privacy is a big concern. We know that availability is a big concern. And our network of dedicated agents will work with you and bring you through the process of home buying or home selling. The program also gives you a nice perk at the end. If you use one of the agents in our program, you will be earning cash rewards. Cash rewards are equal to 20% of that agent's earned commission. So if you're looking for a home and you're buying a home, whatever the agent's earned commission is, you'll get 20% of that. For example, if a home is $500,000, an agent's commission, may be around $15,000, you would get a $3,000 cash reward that you can use at closing. So we all know what's happened with interest rates. We all know what's happened with pricing, um, or excuse me, home pricing. But you can use this as cash to close. So affordability is a problem for a lot of people right now, and Home Advantage is one way to reach those goals by getting that cash rewards that you can use at closing. By the way, if you don't need to use the cash rewards at closing, you can also get that as a check after the close. It does not only work on the buy side, it also works on the sell side. So if you have a home to sell as well, if you use a Home Advantage agent, you'll get the rewards on that side as well. It works in 49 states except for Alaska. Please consider Home Advantage and using our website. It'll be a safe and protected site for you to use. We want your privacy to remain a high concern for us, and so we know how to treat you. Thank you. Next.
Good evening, everyone. My name is Cesar Melendres. I'm a local real estate agent. I'm super excited to talk with you regarding the home buying process. I know real estate has been a very hot topic in the last 12 months, regards to the inflation, the rates, global conflict, whatnot, and how it reflects you as a home buyer seller. So we'll discuss that, give you more information, how it affects you moving on. Great. So everything starts with the choice, making the decision to buy a home. So we'll discuss some of the pros and cons of renting versus buying, how steady income plays a huge role in your purchase loan, some of the different down payment programs available to you, low interest rates. Of course, we know the Federal Reserve, to combat inflation, raise rates. So we'll discuss what's going to happen in the near future. And reasonable prices. We know that in California, affordable housing has become a very huge issue. Those of you considering to move out of state, Home Advantage agents do service 49 out of the 50 states, being Alaska is the one we don't serve. So if you're thinking to purchase out of state, we'll be more than happy to accommodate you. All right, renting versus buying. So when you're a renter, obviously you have the freedom to pick up and go. There's really no long-term commitment. Keep in mind that when you're renting, you're paying 100% interest. So there's no tax benefits. On the plus side is there's less responsibility. The major upkeep and maintenance is on the shoulders of the landlord. Again, with affordability issues, a lot of rents have been increasing, forcing a lot of tenants to either relocate or possibly move out of state. Now, when it comes to buying, obviously, it does take a commitment. The average home buyer stays in their home about 7 years before they actually go back in the open market. There's quite a bit of tax benefit from being a homeowner. During the pandemic, those were forced to work from home and actually were off of living space in there that you worked in. So it's a great little write-off there. And of course, it is more responsibility. The cost of maintenance and repairs is quite expensive. However, the trade-off is the equity. We know that properties appreciate a lot quicker in California, so it kind of propels your wealth that much quicker with the equity. And that of course, is part of ownership. So the lender does require 24 months of steady income. You must document as much income as you can. What you document will dictate the amount of a home purchase you can acquire. Unless you're paying all cash, you must prove to a lender that you have steady income source coming in to qualify for your home purchase. Now that you decide you're going to buy a house, where do you start? Number one is location. Location is huge. Find a location that fits your lifestyle. Ask yourself, where do you want to be? Are you more of a beach community type person, canyon mountain, or maybe the city life? So kind of decide what kind of resonates with you as far as the community that fits your lifestyle. So again, location is very crucial. Definitely make a list of features that you want in your home. Uh, some examples could be that you want a fully turnkey remodeled home, or maybe a fixer-upper where you want a project to kind of make your own custom finishes, or possibly a townhome where they have certain amenities like a rec room, a gym, a pool, what's part of the association. So again, make some features that kind of benefit what you're looking for. And definitely drive around neighborhoods, see what's developing in your community. You can definitely search properties online. I do recommend the Home Advantage website. Great source for listings. There's calculations on mortgage payments and whatnot. I definitely recommend this site as opposed to like Zillow and Trulia. Those are more like third-party sites where they kind of tend to sell you information and send you in the wrong direction. Here, Home Advantage is very well insulated. They do value privacy, and we're the ones that we actually do not sell you information to other third parties. All right, so making the offer. So I definitely recommend getting pre-approved with your lender. Once you get with your lender, you'll get a full application. You submit your financial documents, you submit your bank statements, and kind of speak with them what your plans and goals are. Your credit union lender will get with you as far as the best loan program for you to help you accomplish buying your home. When you're making offers, your agent, home advantage agent, will definitely share comps with you, explain the values in those certain communities there. And again, your agent will just explain what's considered too low of an offer or too high of an offer. The market is competitive, so don't be surprised if you get a multiple offer counter offer. I see this a lot of properties that are remodeled. They tend to go a lot quicker and go slightly over asking price. So make sure you factor in the cost when you're making homes that are remodeled. You may have to make others or multiple properties before you get one. So don't get discouraged if your offer was not selected or you're simply outbidded. This is where a home advantage agent comes in handy. They'll share strategies with you to make your offer stand out that much more, separate yourself from other buyers. So get with your agent. They'll share some great ways to make your offer stand out against competing offers there. And then ask yourself, does this home really fit what I'm looking for? Make sure you get a home that actually services you, meaning that it's the right size, right location, it's a reasonable drive from your work, from commute or family. But more importantly, make sure you get a home that's desirable to a future buyer. Because keep in mind that most likely you'll end up selling your property within 7 years. So you want to make sure that your home becomes desirable after you put it back on the market. And again, your agent will discuss with you a plan to get your home exactly that you're looking for. All right, the purchase process. Once your offer is accepted, you will make a deposit. The seller will take the property off market for you. Then you will open escrow. Escrow is a 30-day process from start to finish. They are the third neutral party of the transactions. They'll work with your lender, your insurance company, to make sure your purchase is in compliance with the transactions. And of course, you'll receive estimated closing costs. Keep in mind that when you're buying a house, it's two things. It's your down payment plus your closing costs. Closing costs means what the lender is charging for the financing. Being that if you work with Home Advantage, you do get cash rewards and incentive by working with us. Essentially, it's a rebate from the commission. And what that means for you is less money out of pocket. So it kind of creates that win-win situation. So everyone loves free money. All right, the lender will definitely order an appraisal to make sure it matches the contract price. Property inspections are very important, regardless if it's a brand new home or remodel. I definitely encourage getting a home inspection. Some examples would be termites, sewer, roof inspections. Because when you search online, you see these photos, these homes look perfect, right? So you want to make sure you actually walk the property and kind of see what's behind the walls to know exactly what kind of a home you're getting. Documents nowadays are now digital, so it's very convenient to sign on desktop or on your phone. So make things very, very convenient when signing documents with this purchase transaction. And then escrow will work with the county to register you as a new legal owners. Once that's been confirmed, then you'll get the keys and then move into your new home. All right, moving up or buying a second home. I see a lot of this with our members where they simply outgrew their home. They want to move to a more desirable area. This is the power of leverage, where you can use the equity to buy other properties, such as investment properties. I definitely encourage to invest in multifamily for that cash flow, kind of build your wealth as time goes on. Vacation homes are great too. With the invention of Airbnb, you can do short-term rentals, again, maintaining that positive cash flow. What you want to do is kind of build your portfolio over time, kind of create your wealth, as we know that properties in California appreciate a lot quicker, so your wealth can definitely be maximized for greater value in the future. All right, current market trends, what this year's market looks like. So, of course, a lot of concern with the economy. We have the inflation, we have the elections coming up, stuff with the Middle East and Ukraine. So it's a lot of things happening. So what's going to happen in the next 6 months? Nobody really knows. But here's what I do know, specifically in California. Since 2019, in February of 2024, there has been a decline in 58% of properties being offered for sale. Simply put, there's just too many buyers, not enough homes for sale. This is why the market has not crashed. You have not seen any major price reductions. Sellers are simply not selling, basically because there's no incentive. They bought their properties 4 or 5 years ago. They have a great 30-year mortgage on a 2% interest rate. In today's market, we're in the 6s from the 7s. So there's really no incentive to go from a 2% interest to a 6-7%, right? So it makes no sense for a seller to do so. So very non-incentive for a seller to do so. That's why the inventory is very minimal in today's market in California. What will happen with current rates? The Federal Reserve did announce 3 separate rate cuts. When and how much, we really don't know. To answer the question is if now is a good time to buy, here's the best answer. The only reason why you should buy a house is that you have job stability, you got steady income. That is the only reason why you should buy a house. People buy homes because they're confident in their job, being that they can promote within the department. They know there's room for them to get promoted, make more money, have a stable job. So that is always the best time to buy a house, regardless if the economy is up or down. Lender considerations when you're working with the credit union here, definitely get a loan officer that really understands what your goals are and kind of sets a plan, what's available to you, especially with different types of loan programs, what the current payments look like, what's required as far as cash to close, ask about the rebate incentives you as a buyer. So it's a great resource for a credit union lender to get with you, discussing your plans on buying a house. And of course, get a loan officer that has ton of experience, that's been knowledgeable with current market trends. So being that said, this ends my portion of the webinar. Next up, we have VP of Mortgage Operations, Veronica.
Thanks, Caesar. Hello, everyone. I'm Veronica Moskowitz, and I manage the mortgage operations department here at Van Nuys in the Van Nuys branch. And I'd like to thank you for taking your time out this evening to learn more about the home buying experience. That was great information from Caesar. My goal today is to have you get a good understanding of the important items in qualifying for a mortgage loan so that when you get to that point, the process is seamless. You'll also learn a lot of the acronyms at the same time, so it's a win-win situation. So the topics that we're going to discuss today is the difference between a pre-qualification and a pre-approval letter. We're going to talk about FICO score tips. I'm going to discuss the private mortgage insurance and loan to value, kind of just give you a quick rundown of how we calculate that. We're going to get into the very important debt to income ratio. And then I'm also going to cover the programs that we have here at LAPFCU that should be able to suit your needs. So the difference between a pre-qualification and a pre-approval is a pre-qualification is the basic review of your credit report and the income that you state on the application. It's a great start in knowing the price range that you qualify for. But the pre-approval is what real estate agents require of you when they're taking you shopping, and it actually is a requirement when you put in an offer for a seller. So it's a true approval, a conditional approval of your income and credit. I would like to emphasize that a 2-year work history in the same line of work is required to qualify for a home loan. So just make sure that you have 2 solid years worth of income with no gaps. Let's move to the next slide and talk about how we can increase your credit score. Well, the first thing is always pay your bills by the due date. Sounds so simple, but our lives get really busy and sometimes we forget. So what I recommend is signing up for auto pay and setting it for the minimum payment due. This is going to honestly set you free from any kind of stress and ever having a 30-day late or damaging your credit. Just one 30-day late can really taint your credit score. So that's an easy thing. It takes time to set up initially, but you'll be so happy that you did that. So as long as you have money in the bank, let that happen. You can go in at a later time and pay an additional amount, so you're not just paying the minimum and paying high interest rates. But at least you know that that's taken care of and your credit is going to maintain good. So the other thing is to keep your credit line to your balance ratio low. And that basically, because this really affects your FICO score. So when your credit card balance is near the max limit, your FICO score actually drops. And so this is viewed as not having spending control or overextending the use of your credit. So they want to make sure that you're balancing by paying some things in cash and using your credit card as a bonus. So anytime you have multiple credit cards and they're all maxed out, it's not a good sign. So just stay focused on that. The other thing that we sometimes run into when we're doing a home loan is that people get so excited and they want to go buy a refrigerator before the loan closes, and so they'll go to, this is going to age me, but I'm laughing at myself right now, Sears. I don't even know if they're around anymore, but they'll take out a new credit card, open a new credit card with Sears, and then we find out about it because we get a notification and we call you and we say, what happened? Now you're over the debt to income ratio. And they'll say, well, it was interest free, but it doesn't matter. We have to include that in your debt to income ratio. So sometimes it'll hurt qualifying for the loan, and then now you own a fridge, I guess, that you can throw in your garage. But so don't do that until the loan closes. This is really important. Keep your oldest credit card open. The reason for that is the credit bureaus look at your oldest credit report, and that dictates how long you've been a credit user. So even if you don't use it because you have better credit cards with better interest rates or better benefits, keep that one open. Charge something once a year, so that it doesn't go stale. But keep it open so that you have that history and showing that you've been a good, responsible credit user. And so this comes up often. What does my credit score need to be so that to purchase a home? And so there's a range between 620, 680, and that's just depending on the loan product that you go with. Some will go as low as 620, and then some require a higher credit score. Next slide. So this is a really simple slide. It just basically, you're going to get to take this you're going to receive this PowerPoint presentation, and so you can do little calculations as you're shopping on the Home Advantage website on how to calculate your PMI and your loan to value. But I want to emphasize that if you're trying to save 20% for your down payment, you may want to revisit that and don't look at PMI as being so negative, especially in California, because values seem to stay steady or continue to increase. And actually, it's a very short run of that. You don't have to wait many years like other states do for the equity to rise. And so if you can't put 20% down, go ahead and get that PMI as long as you can afford it. and just apply to have it removed once you see that there's enough equity to have it removed. And the average really is less than 5 years. So it's not a bad deal if that's the route that you have to go in order to purchase your home. So the next thing that we're going to go over is probably the most important criteria in qualifying for a mortgage, and that's your debt to income ratio. Can you go to the next slide? Thank you. Okay, so your debt to income ratio is the #1 method that lenders use to measure the ability to manage your monthly payments and basically see if you can afford to repay this loan. And so I like to go over, and I do this often with young adults when they ask, what does debt to income ratio mean, and what do I need to do to start budgeting and things like that. So I did a little grid here, and you need to be in the range of 42 to 45% debt to income percentage in order to qualify for a home loan. So, so basically you're going to write down all of your debt and, do this exercise at home just to see where you're at. It's kind of fun. So you put your monthly debt on paper and don't include, so I did a little grid here. Do not include home utility bills, car, health insurance, cell phone, groceries, food, or entertainment, which is kind of nice. We don't include any of that in your DTI. And then what you're going to do is, if you own a property, you can include the principal and interest payment, your homeowner's insurance, your HOA or PMI if they apply. Or you can just simply put down your rent. So you're going to add the monthly debt with your mortgage or rent, total that, and then you're going to divide it by your monthly gross income. And your gross income means don't include any of your deductions for taxes, your 401k, your health insurance. This is kind of nice. You get to do your gross pay. So you're going to divide that, and then you'll get the percentage of what your debt to income ratio is, and you'll see where you fall in line, and the work that you need to put in order to be at that range that is acceptable, especially for a first-time home buyer. Next slide. Okay, so why do your loan with the LAPFCU? Well, I'm going to go over the reasons. There's many, and I hope they get you excited as I get, as I am in doing in supporting our law enforcement in purchasing homes or refinancing. So we have a large variety of products for first-time home buyers. We do investment properties. We do multiple units. We actually go over 80 loan to value with no PMI, and so those are some of the products that we have here at LAPFCU. We can also go beyond that for 45% debt to income ratio that others can't do because we are able to portfolio the loan. So we're not selling them to Fannie Mae and having to abide by their rules. So it's kind of nice if you're like right on the cusp. We'll take a look at it. We look at compensating factors, and we can decide that you're a loan that we want to portfolio here at LAPFCU. We also do home equity lines. So if you already own a home and you have equity and you want to consolidate debt, you want to build a pool, you want to add that ADU in the backyard, we do a ton of equity home loans. So please see us for that. You will want to do your loan with us because we are experts at doing mortgage loans. I personally have over 25 years experience in the business. My team is also very well tenured. They average about 15 years experience in this business. So you definitely will be talking to people that know what they're doing. The other item is you will have the comfort of knowing that we don't sell your servicing rights. So we will service your loan for the life of the loan, and you don't need to deal with offshore or having your loan sold multiple times. We keep it here and service it, and you talk to the people in the Van Nuys branch. So it's pretty nice. We also offer end of watch insurance for your mortgage loan at no cost, and Angela will go into the details about that. And last, we lend in all 50 states. So please reach out to us if you're looking to purchase a retirement, an investment, a second home out of state. We do a good amount of loans in Arizona, Nevada, Texas, Idaho, Tennessee. Those are our most popular states, but again, we lend in all 50 states and we're good at it. So definitely contact us for that. And last, our Special Heroes Home Loan Program was created here at LAPFCU for our sworn and non-sworn law enforcement community. It is a first-time home buyer product with no money down. So it also does not require PMI. And we were hoping that this helps with the affordability. We extended to a 40, you have the option of selecting a 40-year term. And so all you basically need for this program is, obviously a good job, good credit, and just money for the closing costs, which can also be a gift from an immediate family member. So it's a fantastic way to get into your first home and experience the American dream. And this is just a 3-step process to apply for the loan. And again, you'll receive this PowerPoint, so you'll have that. Or you can always contact us at mortgageloanofficers@lapfcu.org, and we can go over the program with you. We love it, and we do a good amount of those loans. So this concludes my presentation. Please keep my contact information and reach out to me anytime. We're here for you. And we hope to be the lender that you select, the credit union that you select when you buy your next home.
Thank you so much, Veronica. So I do want to bring up that we do offer insurance. We have an in-house insurance representative for our membership. Her name is Maria Sencio, and she works for Lapcuso Insurance Services. She can assist you in your insurance needs, whether it be home, auto, or any vehicle, land or sea. And Veronica did bring up our end of watch debt protection program. So for those of you who don't know what this is a complimentary insurance that the credit union provides. It covers up to $850,000 of combined LAPFCU loans or lines of credit if you pass away in the line of duty. It covers up to $400,000 per individual loan, but a total of $850,000. So if you have a mortgage loan, car loan, home equity loan, it's exclusively for sworn and non-sworn law enforcement personnel. So this is for all of our loans. If you are interested in refinancing a loan from another lender to receive this benefit, you can contact me, Angela, at 818-779-3398 or email me at adennerson@lapfcu.org. Oh, I have a question for the insurance person. I'm going to put the our insurance Maria Sencio up again, just so you can take down her information. And when we send the video recording, you'll have all the slides on there as well. So this is Maria's information. And we're going to move on to any questions. So some questions that we have so far is Home Advantage something we will have to pay for? Greg, do you want to?
Yeah, I can take that. No, Home Advantage is a free member benefit provided to you from your credit union. So, please, by all means, use those links provided in the screens. Go to the Home Advantage page. You'll set your own username and password, and the service is absolutely free. If you have questions while you're in the site, you can connect with one of our concierge team by either chat, phone, or text, and we'll help you start your journey to home ownership. If you have a house to sell, it's a great source for researching home values and everything else you might need in the process. And once again, don't forget those cash rewards and that great team of agents that know who you are and know how to take care of you.
Thank you so much, Greg. Another question is, can our children use these first-time home buyers programs?
As long as they're over 18 years old and a member.
Right. Another question is, if I already have a HELOC loan, am I covered under the insurance? You can actually email me and I could look that up for you to see if you are covered under the end of watch debt protection insurance. So you can just email me adennerson@lapfcu.org, and my number is 818-779-3398 if you want to call. Oh, this is a good question. How soon is too soon to get pre-approved?
So the pre-approval and the pre-qualification, we pull your credit, and the credit is good for 4 years, for 4 months. So depending on when you are ready to shop, it's good for 4 months. If you need to increase it, you can call us. Maybe you found something that was a little bit more than you thought when you first started. You can call us and we'll increase the loan amount. After we contact you when we're getting near the 4 months, and we ask if you're still shopping, and we'll refresh the report. And so it's a soft pull, it's not a hard pull, so it won't show that we pulled your credit again. And then it's good for another 4 months.
All right, another question is, what is the advantage of using the Heroes loan versus using a first-time home buyers program elsewhere?
So the difference is, depending on if you have money to put down, the minimum down payment with investors is 3%. So if you have 3% to put down, then I would go with that product. The interest rates are a little bit lower. But you will be required to pay PMI. If you don't have any money down and you're able to afford the mortgage payment with nothing down, then I would take that route, especially if you qualify for that product.
Right. Another question was, a realtor told me about 5 to 7 years ago that LA County had a credit for first-time home buyer. I think they said it was 90,000, but I may be remembering it wrong. Are you aware of this, or are there any other credits?
That's a very good question. There are several grants available for first-time home buyers. I'm pretty sure Veronica can get in detail with that, but yeah, there are several. The most common one right now is the California Dream grant program, where the state actually gives you 20% down as a grant for your home purchase. Of course, there are restrictions and rules, so definitely get with Veronica. I'm pretty sure she'll get with you as far as the requirements. But yes, there are grants available. If you're looking to look and search, there are several grants available for a first-time home buyer.
Okay. Another question, can you assist with the Veteran Affairs home loan and combine it with the first-time home buyers?
So when you are eligible for that VA product and you want a VA loan, that does have to go through an approved VA lender, which we have not applied, or we don't do VA loans at this time. They have 100% financing products, but there is that, I think it's called a funding fee, which is pretty high, and it's equivalent to like a PMI. So what we can do for you is, if you talk to the VA and you get some information, we can do a comparison for you to see if it's worth going the VA route. Just because you're a veteran, doesn't always mean that that's the best mortgage program. So we can do a comparison for you with no issues and give that to you so that you can at least have a side-by-side comparison.
Thanks, Veronica. All right. If someone plans to apply for a program such as the Heroes Home Loan Program, how much money is recommended to save?
So we like to say somewhere between, and Caesar, maybe you can help me with this. It looks like the average closing cost is about $15,000. And I know that sounds really high, but that also includes like non-recurring closing costs, meaning your escrow account that we have to collect 2 months worth so that we can hold that in your escrow account. It has to do, we collect prepaid interest. And that's not what we're charging. It has to do with real estate, real estate fees. It has to do with escrow, with your title, insurance, with recording fees from the county. Our fees are very, very minimal. We make sure that we don't have those, what they call those, fluff fees or hidden fees. We are charging you directly what is being charged to us to process the loan, meaning, pull closing documents. The appraisal fee is exactly what the appraiser is charging. But we seem to see an average of about $15,000 all in for closing costs.
Yeah,
Thank
rule of
you.
thumb is about 2.5% of the loan amount as far as closing costs. Of course, California is a bit expensive in their housing, so it's all relevant. As Veronica said, yes, the lender charges are very minimal. What gets you is the third-party vendors such as title insurance. We have the escrow fee, of course, and the county fee. So it does get pricey somewhat. The more reason why you should work with the home advantage agent, you get a rebate back to you as a credit for closing costs. Less money out of pocket for you. So again, I encourage you to look into working with Home Advantage. But yes, that's kind of the rule of thumb, about 2.5% of the loan amount for closing costs.
Yeah, and an option that you have as well is you can also select a higher interest rate. You hear, lenders constantly advertising that they do no-cost loans. They're basically just giving you a higher interest rate, and then there's something called a rebate. So you get money back, and then you can apply that towards your closing costs. So you can do that with us as well. You can select a higher interest rate, get some cash back, and it'll cover some of your closing costs.
Thank you both. All right, another question. How does the adjustable 5-1 and 5-5 arm work?
Yeah, those are great products, and those are our own products that we have built. So you can go up to 90% loan to value with no mortgage insurance, which is what I mentioned in my slide. And they're very, like, I know that there's some scare behind having an adjustable loan, but they're both fixed for 5 years. The 5-1 is fixed for 5 years, and then the rate adjusts on the 6th year once a year. So that's where the 5-1 comes into play. So depending on, how long you plan on living in the property, you're good for 5 years. And then the rate adjusts once a year. The 5-5 adjusts every 5 years. So it's fixed for 5 years, and then the rate adjusts every 5 years. So there's a lot of planning that can take place. And sometimes when the rates were down to 2.5, people were loving their adjustables because they were going down as well. And so they kept a nice interest rate for a long time. They're great products.
All right, another question. Can you qualify for the first-time loan with combined income from a significant other?
So the significant other would need to be on the loan as well. So both of you would apply for the mortgage together. And then we can use their income. But what comes along with using their income, we also have to use their credit. So just make sure that they don't only have the income, they also have the good credit.
All right, next question. So they want to clarify something. Did I hear correctly that it is a buyer's market right now?
No, it's more of a seller's market. Reason being that there's no inventory. As I mentioned prior, since 2019, there's been about a 50% decrease in homes for sale to February 2024. So there's too many buyers, not enough homes for sale. This is why prices have not dropped or crashed, so to speak. So right now, it's currently a seller's market due to the fact that there is simply not enough inventory.
All right. Next question. If I'm in the middle of transitioning jobs, but it is the same career path, example, nurse, would it affect the loan slash pre-qualification?
So as long as you have a 2-year term of that employment, if there's any gaps, we're going to ask you why you have gaps in that 2-year time frame. There are some reasons that we accept a gap too. So say for example, you paused your nursing job and you wanted to go and get further certifications, and so it was 6 weeks worth, 2 months worth, where there was no income, but you had a decent savings account to kind of get you through that period. And then it escalated your role and your income. We would accept that. And so, but yes, we're looking for a year, 2 years worth of employment. You can change jobs.
All right. Is there an age restriction on applying for a home loan?
So 18 is the baseline. That's really when you can acquire credit. So you need to be a minimum of 18 years old, and you can be 102. I mean, there's no max age gap.
A question about debt to income ratio. What expenses are included in the calculation, i.e. rent, student loans, etc.?
Yeah, so the student loans, we only use 1% of the balance to qualify you. So don't worry too much about student loans. Um, it's basically going to be credit cards, your car payments, any credit lines that you have. That's basically it. And then, with your debt to income ratio, we're going to calculate what your future payment will be. So if you're paying 2,000 in rent, but your mortgage payment with taxes, insurance, impounds, and HOA is 3,500, we will calculate the 3,500 for your future debt to income ratio.
Okay, another
So
question.
just to add one more thing, if you're anxious to have that grid to calculate this and do the exercise at home, just contact us. I will happily send that page to you and talk to you about it, so that you have as much information and education as possible.
Thanks, Veronica. All right. If I'm currently renting and would like to purchase a home, can I just apply for the home loan through the credit union without having to use a real estate agent? If so, is a down payment still required?
Okay, so without having to use a real estate agent, um, I don't recommend that because I mean, they really have the expertise that you need when you're purchasing a house. I don't know if maybe you're buying a property from a family member, or or a parent is selling you the property. Maybe that's the only time to maybe do that exception, and do a for sale by owner situation. But yes, you can apply for a pre-qual. It cannot be a pre-qual when we have a property address that's actually a live application. So yes, you can apply for that, uh, and hopefully you had a real estate agent to kind of guide you through that. But if you don't, you can still apply.
Yeah, you can certainly buy a property without a real estate. It's definitely a possibility. Definitely do that. It's no problem. Keep in mind that when you're dealing without a real estate professional, almost about 50% of transactions go through lawsuits between for sale by owners. Simply put, sellers don't really disclose all the proper information. As a real estate agent, it's our job to ask questions, to investigate, see what's the best interest of the buyer. So yeah, it's definitely helpful, very useful to hire a real estate agent, but of course, it's optional, but definitely recommended. If you want to hire someone that's experienced, kind of guide you in the process, look out for your best interests, just to avoid those pitfalls. It's very beneficial to you. And as a buyer, there's really no cost per se as using a realtor. Typically, the seller pays for the compensation on the real estate side.
Yeah, and you had mentioned also for the 100% program. Yes, the 100% program you can apply for at any point in time with or without a real estate agent. It's just simply another product that we have.
All right, another question. Oh, this is a follow-up question. What information should I obtain from the VA to compare?
So the VA will they will they will refer you to mortgage loan officers that that do VA loans, and so that individual will give you a loan estimate and will one tell you whether you qualify for the VA loan, and then based on what criteria you're looking for, they'll then run the numbers and they'll give you a loan estimate. You'll send that loan estimate over to us, and then we'll give you our loan estimate, and this way you have something to compare to see if it's worth doing that VA loan at 100% versus our 100%.
What is the recommended percentage of income for a mortgage versus retirement for a first-time home buyer?
So what I recommend is when you're deciding to retire, if your income is going to be less than what it is while you're working, you may want to consider purchasing with your current income while you're employed, and do it as a second home, with the intent to retire in that home. If you're at all worried that you're not going to qualify under retirement income. We don't see that a whole lot because our police officers, if you're in law enforcement, your retirement, your pension, all of that seems to be pretty good. And so, but I don't know if you're going to go buy a mansion or if you're going to downsize. So basically it depends on that. But if your retirement income is going to be drastically different, less, then you want to apply for that mortgage before you actually retire so we can use the higher income.
All right, another question. I have a home mortgage with LAPFCU and another home with another mortgage company. Is it easy to transfer the other company to LAPFCU? And would a HELOC be better to pay off my homes?
Well, a couple of years ago, I would have said maybe because the rates were really low on the HELOC, but today they're at 9.25%, and that's because the prime is high at the moment. So you take the prime and the margin. Our margin is 0.75, and the current interest rate is 9.25%. So it's pretty high. Especially now that rates have gone down a little bit and we are in the bracket of the 6% range. So you cannot transfer your loan over to us. You actually have to refinance it. It has to be a new loan. So we can talk to you about that. Maybe you might want to consolidate the two and have one loan. We're going to ask for your statements, your mortgage statements, so we can see the interest that you're paying and how long you have left on your mortgage, to see what best works for you. We want what's right for you. We don't want to do your loan if it doesn't make sense. We'll recommend that you stay where you're at if it looks like you should. So it's just a matter of taking a look at, how long you have left, what your interest rates are, and whether it makes sense to consolidate the two and do one loan, But I could probably guarantee you that it's not good to take an equity loan to pay off your first mortgage because I'm sure the rate is higher.
Right. Another question. If I purchased a home back in 2006, can I still be eligible for these new home buyer programs?
So so you do need to be a first-time home buyer for the 100%. I don't know if you plan on selling the other property and buying something else. The 100%, because we don't require any down payment at all. You know, we're holding 100% of the risk because you didn't put any money down. You can just walk away. So it's really important that we offer it only for first-time home buyers, and that and that you qualify, you know, where that's why we tailor it just to the law enforcement or the civilian employees in the law enforcement world. So that's basically the question is, are you planning on selling the property that you live in now?
Okay. What is the rate today for a 30-year fix compared to the 5/1 ARM? Yeah.
Okay, so the 30-year fixed today was at 6.875. And that's for a conforming loan, and that's a loan amount of up to 766,550. And the 5/1 ARM is at 7.5. So with the rates dropping, with the it actually works in your benefit of being able to do a 30-year fixed at this time. But normally the ARM, the adjustable programs, have a lower interest rate. So we kind of look at that every day and balance it. Today it happens to be a little higher.
Okay. Can I have a co-signer for a Heroes Home Loan?
A co-signer for a Heroes Home Loan. We don't allow co-signer, but they can be on the loan and not be a law enforcement.
I think that's what they meant.
Yeah, so they have to live in the property.
Okay. Can you apply for a duplex and include the amount of the rent received from tenant as income when applying for a loan?
Yes. They're hard to find in California because those get swept up really quick. But those are a great deal, you know, because you're actually living in maybe in the front property and you can watch over your unit and then you have income coming in. Those are great investment properties.
Another question, if I recently leased a new vehicle, how does that affect me wanting to purchase a home in the next few months?
So we're just going to take the debt to income ratio. We're going to take your mortgage. I'm sorry. We're going to take your car loan payment, your monthly payment, and add it right along with the bills that you have. Now, if your lease is almost up, like say less than a year, we will omit it from the DTI calculation. So if you only have a year left, we assume that there's no car payment going forward. And so that works out good. Otherwise, we just include it like any other bill.
All right. Are there any programs for new college graduates?
Do you have a job? So as long as you have a 2-year work history and you can afford the mortgage payment, I think it's, you know, awesome to start looking and seeing what there is out there. But yeah, you definitely have to be employed for 2 years before you purchase. So hopefully you found a cool job.
All right. I think we have time for one more question. Do you have to be a sworn officer for the Heroes Loan, or does this apply to members as well?
You have to be a sworn
Or
police
civilian?
officer or a I'm lost for words now.
Non-sworn.
Yes. Yeah, it only applies for that group.
You have to work for a law enforcement agency, either sworn or non-sworn, to qualify for the Heroes Home Loan. And okay, I guess one more question. 6:59. My husband recently retired after 32 years with LAPD. We will be moving out of state. We will both be self-employed. Do these factors make it hard to qualify for a mortgage? Note, we will be selling our house in California, so we will have money towards the house we will buy out of state.
Yeah. Yeah. So it will make it difficult because we won't have a history for your self-employment. So at that point, when we're doing a loan, we're doing a 2-year look back, and that's where we require 2 years worth of employment. We're also looking forward, right? Because you're buying this home, and we want to make sure that you're getting into a home that you can afford. And so if you on the application, if you add that you're going to be self-employed, or you already started that self-employment, we're going to ask for tax returns, and you're not going to be able to produce them. And so then then you're retired, so we're not going to be able to take that income because it's not future income. So the best thing to do is to buy it as a second home before you're retired. And then you'll sell your house, and you can do a principal reduction on the loan amount, whatever you need to do if you wanted to put more money down. But it's really important to do that when you've got that solid income, the solid history, before moving out. Because a lot of our members will tell us, well, I'm buying this home as owner occupied while they're still employed, and then it gets into, well, how are you a police officer in Tennessee, in LA County, buying in Tennessee? So we recommend that you do it as a second home, and it's classified as a retirement home, and then go ahead and retire. So you took care of being able to qualify for that mortgage payment before things get sticky.
Thank you so much, all our presenters. Thank you very, very much. It looks like we do have some more questions. So if we did answer your question, please reach out to me and I will get those answered for you. Just go back to the slide. This is my information, my phone number and email address. So you can email me your questions and I will get them answered for you. Again, thank you very much for joining us this evening, and we always thank you for your membership with LAPFCU. Have a great night. Thank you so much.
Thank you.
Everyone, thank you.
Thank you.